What's up, everybody? Welcome to another edition of the Morning After live Q&A here. Glad to see that the people are here. Trevor, if your screen's blank, you got a problem, homie, because everything looks okay here on my end. The stream is good. Everything looks fine. So I suggest a little refresh or something, maybe a different browser, whatever. So I'm going to give a couple minutes, again, for people to trickle in. Plus, I got to shoot over an email anyway. Yes, sir. So we've got a lot of fun stuff to talk about here today. And let's see, where do we start? I suggest we just start by digging right into the reaction that we saw in Amazon and the freak out that I got last night from the whole world, because everybody was like, oh my God, Amazon had the greatest report ever and they're going to go to a bazillion tomorrow. No, they're not. It wasn't that great of a report anyway. You got to see, this is why I say, you can't freak out about what happens in the after hours for many reasons. One, the business news media will sensationalize everything. So what I saw yesterday, all of the headlines were like, Amazon, knocks it out of the park with a fantastic report. Shares surge higher. It's like, what? Like, oh, shares are up $35 in after hours. Now, for the normal mere mortal stock, $35 is spectacular, right? Even today, $20 is spectacular. But 2.3% isn't spectacular. And 4% isn't, I guess it is, but when you're talking about Amazon, is a 4% move really that remarkable and fantastic and spectacular that you have to, cover it? All of the headlines have to cover it, and everybody's got to freak out about it, and we're all, running around screaming with our hair on fire. Now, I got some emails about this too, about everybody kind of freaking out, right? Like, what are we going to do? It's going to go to 1,000. The best thing that I can tell you, the best advice for when you are selling option spreads, right? So when you are putting in credit spreads, is to chill, because time is on your side. So specifically for us here, what were we talking about? The 955, 957.50 going out to May. So if the thing spikes, just chill out. Just relax. Now, you guys know that this wonderful program, which I'm not going to use anymore, has a tendency to blow up and crash on me. So let's see if it doesn't crash this morning. Oh, okay, we didn't crash. All right. So let's look at this now. May 19th, 9:55. Oh, look at that. 9:55, 9:57.50. So both of these options obviously are down pretty good here. But we did the spread, so this is going to affect us differently, right? So the other reason why I say don't get too excited when you're trading these spreads is that it's going to take time for you to make all your money anyway, right? You can easily lose money by being hasty and just trying to rip it right away. When in actuality, you can just chill and kind of just let the market come to you on this, okay? So way out of the money. Both of these took a hit today, but still it's going to take a little bit because we got all the way until May 19th, right? So just take it easy. It's an out-of-the-money call spread. Just let it go. Don't freak out about it. Even if we were buried, right? You still don't freak out about it. Because if you're buried, it's not going to get any worse. It can get a little worse, but for the most part, it's not going to get much worse. So you can just kind of chill. When you have to be hasty is when you're buying these, if we're long a call spread or long a put spread or something like that. That's when you got to be hasty. And then you got to rip it right away. But when it's looking at like this, it's crazy. And this is crazy. Look at this. Look at all of this options premium that just got blown up. Man. And it's the same thing here. The guys who really went out here. Can you imagine these people buying these $1,000 calls, just rolling the dice all the way out here? There's 1,300 people that did it. So Danny's got a question. Can we do a new Amazon bear spread? I kind of, you know what? I don't think that's a terrible idea at all. Because look, and I like to do this sometimes intraday, fading this move, right? So you see it happen and you immediately go, okay, we're already within the gap here, right? And what do they say? Gaps get filled. So there's a pretty decent chance that this market sells off and takes back a big chunk of this, right? But remember, man, these algos are all over this thing, so you got to draw your fibs. And these are possible levels where this thing's going to find support. Sure enough, found a little support there. Boom. Now we're at the 38.2% level. It's going to find a little support here. We'll see what happens. Again, at the 50, there's likelihood there, right? And then the 61.8, so 930s. So you got to be careful with these. Now, I don't know, Danny, that this report's going to make me super bearish on Amazon, but fading this move in the short term, if it was a bigger move, I think I'd be more comfortable with fading it, but it's 2%, If Amazon gapped up 10%, I'd be fading it like crazy. But here, it's not that big of a move, even though we are within the gap. I could totally see them, bidding this throughout the course of the day. We just got to see what's happening in tech overall. So what's happening in the NASDAQ? That's what I'd like to see here. Same thing, right? They're fading the early strength. Now this might seem confusing because you're like, hey, what the heck, man? They had a good report. Why are they fading this right now? Because oftentimes, if you're a big money guy and you want to take profits, you got to do it when there's a lot of liquidity, when there's a lot of people that are trading. So right now, after these big earnings reports, there's a ton of people that are out there trading. So that's what we're seeing right now, is that maybe there's a little bit of profit taking, some institutional money coming in, knowing there's going to be a lot of people in the market today, and they're just kind of dumping their shares, right? So that's part of what we see happening today. So it looks like the NASDAQ already, we're not even, geez. I was saying yesterday, it's like, oh yeah, big day out of these tech stocks. It should boost us in the morning for sure. I thought it was going to go the rest of the day. It doesn't look like this is going to last long at all. I wish I had my intraday futures up. I could probably show you. I can guarantee you that this thing is retreating back to the VWAP and then probably going to make a move from there. Man, I don't know. We'll see. So overall, the story for Amazon, I think it's going to kind of trickle down here a little bit. No, don't freak out. Amazon is not going to go to 1,000 today. It's not going to happen. People are going to digest this report and realize that it wasn't, they didn't reinvent sliced bread. Excuse me. And, yeah, man, just kind of par for the course. Nothing that spectacular out of Amazon, right? So if you sold that call spread out of the money, just take it easy. Looks like we're going to be okay. Lotto ticket obviously doesn't work, but that's what the lotto ticket's there for, right? It's if something spectacular happens, this will profit greatly. Something spectacular did not happen, so it did not profit at all. Okay? All right, so now what else? Starbucks, of course. So a little disappointed and Starbucks. Obviously, the market is. Personally, I'm frustrated. They beat on EPS, right? And then they missed on revenues, or in line with EPS and missed on revenues, something like that. Let's just do Yahoo Finance. You know me. Pull up the Starbucks, see exactly what happens. Get a clear sort of picture here. And guys, I know you see that I have my sort of, we have the proprietary software where I get all this data and things like that. When it comes to an earnings report, I'll just go on Yahoo Finance, or I'll just go on the news on Starbucks, because it's not like it's any secret, right? Like it's out there. You don't need a premium news feed to get it. And of course, see, this is from Zacks. So EPS 45 cents, which was in line. And this was the problem here, is they missed consensus estimate for revenue. So they came in at 5.29 billion, where the market was looking for 5.42 billion, right? So that's the difference. And that's why the stock is down. Should it be down 3%? I don't know. And look, they even had a little benefit, little bump in the operating margin there. So that was good. Net revenue in its flagship segment rose 8%. So, there's some decent news in there, but market doesn't like it. This is what I was saying before, is that if a institutional player wants to get out of a stock, they will oftentimes wait till earnings, because then there's going to be a ton of liquidity that they could access after the earnings report. So I'm not saying that's happening for sure here, but I'm getting that vibe from the market right now today. And going back to my kind of overall, we got the Dow's off 13 bips already. NASDAQ ticking on down. And look at the S&P now. So yeah, so when you see these reports and they're not that terrible, you got to ask yourself, like, why is this thing down 3%? And then these are the moves that you can likely fade, right? But here, what's going to happen intraday? These guys gap down. Now they're running out again. They're gonna retest that bottom for sure, right? And then we'll see what happens. You'd like to see this gap get filled over the next couple of weeks. So we'll see. The other good thing about today, it's a Friday, right? So like the earnings come out and then people forget about it over the weekend. So these are the moves that can get completely reversed. If you look at Starbucks, it's basically right at this fib we drew. So it's coming right down to that 23.6, and we'll see what happens when it gets there. So we'll see. It's coming back down. Let's see if it catches a bid. All right. So the Starbucks trade not working out, right? Because it's bullish on Starbucks. But we give it a little bit of time. And then the Amazon trade, everybody, you can chill out, right? Because it looks okay. Let's see a couple of things that you guys are looking at. You know what? Before we get into this, volatility today. Up a little bit. I mean, not much. 1.16%. That's essentially nothing. 1048 still on the VIX. Very low. Not a whole lot going on. The market's starting to sell off a little bit, but, that's nothing. And if you guys are looking for ways to trade the VIX, because you can't just buy VIX, the actual VIX. Like this, you have to buy options on it and stuff, right? And I know you guys might not necessarily want to do that. So there's all sorts of different ways, right? So you got VXX, but I want to show you guys long term how dangerous this is. Now, why does this happen here? This is a real chart, okay, of VXX, which is an ETF or ETN, whatever. I don't know if it's ETF or ETN. Who cares? That attempts to track movement in the VIX and the volatility index. And if you notice, it always pretty much goes down over the long run, right? Always goes down. You think that's bad? Look at this one. Yes, that says 2,000 in 2015, and it's at 1427, right? So, big move down here. Now, why does that happen? That's because of a little something called contango in the VIX futures contract. So let me show you this. This is a site I like to use, VIX Central. This shows you the VIX futures across the various months and what their price is at. So you see that? And then here it shows you the contango percentage. So this is the difference in the prices further out, right? So the further out you go, the more expensive it is. And these contangos are expressed as percentages. Now, this isn't that big of a percentage, right? What I mean by this is the way that the VIX trades is it's measuring the expected range of the S&P 500, right? And it uses the options contracts to do that on the S&P index. So you get further out here, in a normal environment, the range is going to be larger the further out you go, right? If I was asking you, hey, where's the S&P going to go over the course of the next month? You're going to give me a range. If I say, what about the next 6 months? You're likely to give me a larger range, right? The next year, you give me a larger range because there's more uncertainty. There are more things that could happen. You're not quite sure, right? So that's what's typically reflected here in the VIX. But when you're trading those ETFs like UVXY, like VXX, this contango percentage is constantly working against you, and it's just part of their pricing mechanism. So always be careful when you're messing around with these things, if you mess around with these things, so that that doesn't happen to you, okay? Don't get chopped up and get caught in one of these things where you're like, oh, volatility is going to come, so I'm just going to buy VXX, and eventually I'm going to make money because it's going to spike. No. I mean, it does spike, and you can make money, but you have to be super careful. So it's really kind of a tough way to go about things. Anyway, there's my little volatility sidebar, okay? So be careful and learn a lot. And that VIX Central site is one of my favorites. So VIXCentral.com. And there's all sorts of other stuff in here that you can click around on. It's got some help, historical data, shows you a little bit more about contango, historical prices, bust out the all sorts of stuff for you. All right? So I suggest you check it out if you want to learn more about volatility and the VIX. All right, so I saw a little bit about Chipotle. So let's talk a little bit about Chipotle. So, big move up. Yesterday gave some back, and now here we are, 478.55, right? So kind of moving, giving back a little bit of the move, of course. But I'm not too worried about this. Oh, one thing I did want to touch on is in terms of these lotto tickets or these more aggressive trades that we're looking at, when that hits that morning, you rip it, like with the lotto tickets, because you don't have time to mess around with it. You don't want to stick around. When it hits, and you rip it, and you're done, okay? And I talked about a little bit in the GBU yesterday how you really need to do that. Just get in, get out, and be done, versus some of these other things where we just kind of linger, especially the credit spreads, right? We want to stick around for a long time, but you definitely just kind of rip those. So we've got our sort of predetermined levels. It didn't quite get to 500, right? Got to 497 yesterday. See if we can zoom in a little bit on that. And yeah, you see it just kind of putts out. Boom. Look at where we are here. So we retested Wednesday's low. Interesting. I love zoom. This is why I love zooming in on these charts, because you just go, oh, that happened. That's where we are. Yeah. Let's see. I gotta add another key fib. So these are the levels that you guys, if you're messing around with Fibonacci levels, this is what you want to do: 23.6, 38.2, 50, 61.8, and I like to do 76.4. Okay. Look at that. Boom. Very close to the 76.4. Happens to be where the support was. So let's see if this holds. So in the short term for today, that's definitely a key level to take a look at, which also happens to coincide with the lows of Wednesday. So if these guys can continue to rally off of that, that would be great. If not, we'll see what happens. So that's the price action right now. Really zoomed in here on Chipotle. Commodity Channel Index. Now this is a very short-term CCI. Approaching this zero line. So we'll see what happens here. Look at this volume. Yeah, we can zoom in here. This is why I like using freestockcharts.com, because you can zoom in and then it actually adapts and changes the volume profile here for us. Really staunch resistance here at 487 right now. So the market's kind of coming lower, and it's, even though from a technical perspective, this dip down here should be where a lot of support is, it wasn't there. You can actually see there's kind of a trough in the volume down here. If this is going to hold, you're going to need to see a lot more volume at this level. And so far, just haven't seen it, which is interesting. But that's also compared to all of this crazy volume that was going out during that session. So we can drop down and just get yesterday. And here, let's see. Move it just to yesterday and today. Okay, cool. So now you can start to see this volume profile a little more clear. And it looks like we're kind of holding up right here. So there is some support coming in here. Just surprising to me that doesn't happen lower, but it's right here. So, hey, that's good for the bulls if this continues. All right. Let's check back into Amazon just for giggles. Look at that. A little bit of a bounce. And I think it's going to play within these fibs most of the day now. Approaching this, maybe it runs out of gas, maybe comes down here. It's going to bounce around a little bit. I really have no interest in day trading Amazon right now, right? We put on the credit spread. Just kind of see what happens. Just let her go. Just let her go. And I'm going to take this fib off so my Amazon chart isn't all crazy. Big gap up. Odds are, I believe this gap gets filled over the course of the next couple of weeks. Because, yes, it was a great report, but was it that stellar? Is Amazon going 1,000? I don't think so. And if you notice, one thing that I put out there yesterday, which, man, did I catch some flack, is a little bit of bearish divergence on the Amazon chart. So the money flows have been going negative here for Amazon while the stock price continued to rise. And that was one of the things that pushed me to go, nah, you know what? Maybe this is going to be a little bit more bearish than people think. Not a lot of bit more bearish, right? I wasn't out here pounding the table, but I just thought maybe it's not as great as people think. And so far today, this still hasn't turned around. So we're going to have to, I don't know. I think the jury is still out. So I'm not a buyer of this. I'm not buying Amazon at 940, let's put it that way, right? I think maybe they roll over a little bit, give up a little bit. I don't know. That's just what the chart's saying. The chart's saying to fade it. So fade it we shall, my friends. Okay, what else is happening in the world that we need to address? Later on today, we're going to talk about Apple. And we'll go over this with Apple. But look what's happening again with Apple here. Dun, dun, dun. It's happening again. Bearish divergence between money flows and the stock chart. Interesting. Very interesting. I don't want to go too much into Apple because, again, we're going to be covering them pretty soon here at, 11 o'clock Central. So you got about another hour and a half. So I'm not going to go into those too much. I'll throw it out to you guys, though, because I think I'm done with my little presentation or, covering the things that I wanted to cover for the most part. I could talk a little bit more macro stuff, the market. And you guys have seen me rant about this a little bit in Dave's Daily Dive, where we had this sort of downtrend here on the S&P 500. I should be using my Epic pen here, then I wouldn't have to bother with these things. Get out of here. Get out of here. Oh, no, see, now I don't know how to do this. There it is. You got to make it bigger so you can take it out. Epic pen. Epic. It starts with an E. Okay, there we go. So again, this sort of trend breaks through the top of the trend line. Like I was saying, don't wait for the breakout of the all-time high because you're gonna miss a lot of this. If you get the breakout from here, you're gonna benefit much more, and that's what we saw on the S&P 500. Okay, which I think moves higher. And you see here, similar pattern, sort of lower highs, right? A lot of people waited for this breakout, and they miss all of this. So if you wait for this move at 2,200, when you could have got in at 21.25, that's not an EpiPen, but the Epic pen. KBE. So how big are these? The KBW Bank ETF. How big are these banks? I guess is what I'd like to know. You're going to make me look it up, aren't you? That's fine. KBW. Let's see what Zach has to say about it. Wait, sorry, KBE, you said. KBE. Where are the holdings? I got holdings here? Holdings. S&P Bank ETF. Oh, okay. So this is the bigger the banking sector. Modified equal weight. Represent banks and thrifts. CIT Group, Northern Trust, Key Corp, Bank of New York, so regionals, right? I guess for the most part. So everybody thought banks were going to do fantastic and rates were going to go up. Well, guess what's happening, folks? Interest rates, since the Fed increased the overnight rate, have gone from 2.6 on the 10-year to 2.3. And now we have, I'm going to continue to draw this line out here. Now at 2.3, I think we can retrace and go lower a little bit even before going higher. Because with the market at all-time highs, right, and all these stocks screaming higher, why is the 10-year at 2.3? It doesn't make a lot of sense, right? This 10-year should be getting up and getting out of here like it did in the early stages of the Trump administration or the Trump victory, right? Leading up, not even before, when he was in office, it was over, but just the move, that initial surge higher, which could have been short covering, right? I'm sure part of it was short covering, then they hunted the stops, and then now here we are. The pattern here on the 10-year lends itself to more downside action here, like coming down and hitting this trend line before coming higher. And it's stalling out a little bit here at 2.3. So I think it can come down a little bit before going higher. So what does that do to KBE? That puts more pressure on KBE. And if you notice, I mean, it doesn't look exactly like it, right? Because this is kind of the love child of, interest rates and the stock market, right? And absolutely, Danny, it looks like the end. Of course, it looks like the end. I think we talked about that the other day, where yen, 10-year, and gold are all kind of very, very closely connected. So when you're looking at banks, it's a mix between interest rates and stocks, right? Just like when you look at these mining stocks, it's gold and stocks. Oil stocks is price of oil and stocks. So you have these two components which add a level of risk, obviously. I'm actually doing a big report on that when it comes on Monday, I think, our Zacks Confidential, where I'm talking about how divergence away from what you think should happen can actually create opportunities. So what I mean by that, like if you're looking at gold and then you're looking at a gold stock, so I'll just throw in one gold stock that I know. So when you're looking at gold versus the gold stock, gold's actually going to move more. Maybe I should hang on, I'm going to change the comparison. I'm going to put gold, and then the underlying ticker is going to be the gold stock, because this will make more sense. That when gold prices move in a direction, the miner will tend to move in a direction just more like exacerbated, right? So it's got like a correlation coefficient that's larger. It's kind of like the good old, y equals mx plus b, right? They just move more in that direction than the underlying does. So depending on what you see in gold prices, you're going to see that correlated you're going to see that in the stock that's tied to that. But it's going to be exacerbated. And then when these correlations kind of break down, there's usually like a regression to the mean. So if it gets like way out of line, it'll have a tendency to kind of get back in line over time. And you could go further out and you see it better. So you can see it kind of gets out of line, boom, and then it ends up tracking. And if it gets out of line to the downside, eventually it ends up tracking. So eventually it ends up coming back, right? Anyway. Little rant, but you guys are getting me ready for the big report that I have to finish up today. Or I can finish up the weekend, who knows. We'll see what happens. All right, so where are we at now? So I got KBE, Mr. Softy. I don't know what to think about Microsoft. And that's why you don't ever see me, I don't know that we cover them too much in these reports. Look at this. Did you know it was a 4? Now let me tell you, for a company as large as Microsoft to be a 4 on a Zacks rank means that there's a lot of people changing their mind. So let's look at the detailed estimates page here. Really? I didn't realize that Microsoft had double-digit revenue growth. Not translating to the EPS. So this is a soft 4. This is not a bad 4. Okay, so that's not bad. Let's look at the price consensus EPS surprise chart. You know I love it. One of my faves. Because this can tell you a lot about Microsoft. And again, so this is one of those things, right? It's going to be great. No. It's going to be great. No. It's going to be great. No. Right? But look at what's happened recently. It's the opposite. It's starting to trough a little. So if you can see this continue the upside, Microsoft can really, really get up and go. You won't have these retracements like this, right? Now, what's on the horizon for Microsoft? They've been working a lot in the VR/AR, augmented reality space. If they can get something off the ground, that'd be great. Obviously, they still have Xbox, and they've had like integration with their Xbox catalog and PC, so they're trying to branch out that way too. So maybe there's something brewing here at Microsoft. I don't know enough about what's happening there specifically. 4 earnings beats in a row, and the stock right now, it looks okay. Look at how many times it found support at this 50-day. So I think if I'm trading Microsoft, I wait for it to come back to the 50-day before I buy. Another thing, guys, this is great. A way that you can look at options or use options in your trading. Let's say you are bullish on a stock like Microsoft over the intermediate term, right? Or long term. And you're looking at that and you're saying, hey, man, I don't know if I should get in here or not get in here. How do you feel about Microsoft? This is what you do. You can do May, right? We'll do May. And look at the puts. And where is the 50-day right now? Basically 65 and change, okay? Let's keep that in mind. So let's look at the 65 calls right now are 15 cents. Okay. 65.50 or 22 cents out to May. So that's May. What if we go out to June? What's June look like? So June 65's 43 cents. So it's a little bit better. So if you're bullish on Microsoft, you could go ahead and sell 65 put for 43 cents, right? So now, if Microsoft stays above 65, you pocket the 43 cents, right? Not a ton of money, but it's 43 cents, right? Or if Microsoft goes down below $65, the stock's going to be put to you. So you're going to have to buy Microsoft at 65. But if you were waiting for Microsoft to get to the 50-day moving average to buy it anyway, why not get paid to wait? So that's great. And now your cost basis is going to be 65 cents minus the 43 cents that you took in premium, or 64.57, which is great if you like Microsoft over the long run. And you don't even have to go that far down. You can take a look at something that's much closer to the money and do the same thing and just go, okay, well, I'll get paid $1.08 with Microsoft up at $68. And if Microsoft goes down below $67.50, then fine, go ahead, put it to me at $67.50. And your cost basis there is going to be the $67.50 minus the 108, or 66.42, which is still much closer to the 50-day moving average. So this you could do as an alternative to buying 100 shares of the stock if you do like the company, right? And if over the long run you're not worried about it. So you could say, fine, this is what I like to do. These are great because it's almost like setting a buy stop for yourself, but getting paid to set a buy stop for yourself. Right? So that's fantastic, I think. If you're ever thinking about setting up a buy stop, that's a better way to do it. You're going to get paid to do it, which is great. And if Microsoft rallies, it doesn't get to your stop, right? Whatever, you got to pocket that money. And you're going to wait and be patient anyway, so what does it matter? And you can continue to do this. You could do it. You could literally, on a company like Microsoft, you could do this every week if you wanted to, right? You could say, okay, give me the 67s, or not the 67, that's low. This is expiring today, right? So, but you get the picture. You could do it if you wanted to every week, obviously. I would do it once a quarter, really, just because you're going to get more juice. Otherwise, your whole life is going to be resetting all these little silly stops or these short puts all the time, and then you might get eaten up with transaction costs, right? Because taking $20 and it's going to cost you $15 to put it on really doesn't make a lot of sense, right? Okay. Oh, I guess I do have to answer about KBE though. Do I think that KBE Wait, let me finish Microsoft, and then I'll go to KBE. Okay, so the actual question here, do I think Microsoft retraces back to 66? Absolutely it could, because the 50-day moving average is 65.28, right? So my suggestion is if you like Microsoft and you're worried about that, go to June. You said 66. You could sell the 65s, or you could sell the 67.50, and your cost basis is going to be, like I said, 67.50 minus the 108. Your cost basis is going to be 66.42 anyway. So if that's where you wanted to get, you could do that. So there you go. Now back to KBE, because I didn't answer the question. Do I think it'll go below 43? It's at 43.05. So, yeah. Of course. Look at this. To the 50-day, and running out of gas is the 50-day, and the commodity channel index is going from overbought, coming down. A little bit of bearish divergence. Not even bearish divergence. Let me clarify. This is going down. This is going down. That's not bearish divergence. Bearish divergence is when this is going down and the stock is going up. Okay? Just something quick to point out. What's happening to Amazon again? 939. Ooh. Just to prove a point, I'd like to see Amazon go down, but we'll see. So they did change. Microsoft changed Office to the subscription model. That's very true. It's very true. I have that Office 365, and it's great because it makes my life easy, especially when I want to work here in Miami. If I go back to Chicago, back and forth, I can have everything kind of in one place. So that's all fantastic. Okay? All right. What else? I just touch on yen, and I do this in a daily dive. I think there's firm resistance here for the yen at 112, 140, or 112.14 rather. We have to hit this. It has to happen. I wanted it to happen today. Maybe it happens Sunday night. We'll see. But it absolutely must occur for the yen to go lower. Or in this case, dollar yen to go lower, which means the yen goes higher. Okay? What do we got for next week? I'm going to have to admit that I do go to earningswhispers.com, my friends. Okay? I do. I do it. Calendar. Next week. Monday. Well, obviously we're not gonna. Oh, we got AMD after the bell on Monday. You guys know I don't like doing Monday shows. Wait, what happened? After the bell. Monday, I have a lot going on Monday, so I try not to do Monday things. AMD is tempting, and I know I've gotten some questions about AMD. Jury's still out about AMD. We'll see. Tuesday. This is Tuesday morning. I'm not worried about this. Tuesday morning after the close. Or Tuesday after the close. Oh, man, there's so much. Look at this. Is just the A's. Oh, my God. There's a lot. There's a lot, guys. So dig in. See what you want. Throw it my way. And we'll see if we can't get it done. There's a lot going on. We could talk about AMD a little bit quickly here. We could certainly do that. All right, so let's do that. First, let's look at, come on, chart, don't blow up. Western Digital, woo, look at that spike. Long May 19, 85, 87.50. That looked great this morning. You might be okay. Look at that. See, they fade this whole move. Fade the whole move. Creeping on up. Western Digital. I think you're looking all right, Western Digital. WDC. Zax ranked number 2. I like to see that. Look at that. Creeping back up. Mr. Wallace, did you use Zax in your analysis? Because if you did, I'll give you a thumbs up. Because it looks like this thing is working. is working. It would warm my heart to hear that you use my analysis and are going to make money on that. I'm not going to lie. So that looks pretty good. Let's look at AMD real quick, because I don't know if I'm going to be able to do this AMD thing. Well, are we concerned about AMD right here? Because they had their run? That would be a concern of mine. But that's just the quick view, the quick glancing view. I know they're a pretty good turnaround story. This is a little concerning. Getting a little bit worse here. Getting a little worse. Getting a little worse. Getting a little worse. 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 Oh, it's all getting worse, guys. I don't know. AMD. This might be one of those scenarios where you want to take the optimism out of the market. So if you could find something out of the money, right, on AMD, what do the call spreads out of the money look like? That's what you need to find out. And that's, I think, where a lot of your focus should be if you're thinking about AMD. Calls out of the money. Look at this. Calls out of the money. They're there. Look at these guys. Look at how many people are betting to the upside there. Yeah, that could be a problem. That could be a problem. So that's what I would take a look at quickly on AMD. That's my snap judgment. So don't yell at me if it doesn't work, please. Twilio. What the Twilio? Man, I love Twilio just personally as a stock that should be bought. I bought it in my home run service, and I think I got shaken out here down at 25. Looks like it's bouncing now. We're at 30. Obviously, it's not worth $70, but I think they have 50% year-over-year revenue growth or something like that. I can't remember off the top of it. Okay, so 33%, right? Revenue growth. They're all about the chatbot. This is supposed to be something. It's like, I guess, the first kind of stage in automated AI text-based stuff. But here's the problem with Twilio, right? Same sort of thing. Now you got 4 frowny faces. Why is this moving in the wrong direction? Why? So that's not too good. You don't want to see that. But the company, especially the companies just starting off, the analysts are going to be kind of all over the place, right? And look, they have been all over the place. So Twilio, as far as an options trade on earnings, is just, I don't know, maybe. I would much rather be like a long-term owner of Twilio personally, because I think that, these chatbots are going to be a much bigger deal than people believe. I mean, think about it. Like now you call and you get through this stupid automated system where you're, doing whatever, pressing numbers. It's going to be just like, oh, hey, hit us up on your, with your messenger, and on your phone, you're just going to you're going to send a message to Comcast, go, hey, you guys are terrible. My stuff is down. And the chatbot is just going to comprehend what it is you're whining about and try and give you a solution, right? It's going to be terrible early on, but these guys provide the framework for companies to build these kind of things. Like they're the language that interacts between the communications world and the programming world. So they provide an API for that, which I think is going to be great. Remember, the other day I was talking about, I don't know if I was talking to you guys, but who made the most money in the gold rush? It was the guys who sold the picks and the axes. So Twilio doesn't make the actual chatbots. It's the API for the chatbots. So definitely a pick and axe kind of situation here when you're talking about Twilio. Yeah, selling Twilio puts would work for me if I wanted to buy more Twilio. So if you like the twills, you can definitely take advantage of the negativity, right? The pessimism. And if you want to get, the stock assigned to you and you got no problem with it, the 30s, 31s, right? You got enough money for it? Fine. If it's going to come down and buy it there anyway, boom, that's a decent way to play that. Okay. And you can do that with any stock. It doesn't have to be Twilio. It doesn't have to be Microsoft. Whatever it is, guys. Selling the naked put is a great idea if you want to be a long-term holder of that stock anyway. It's a great way to do it because you get paid to essentially wait for your buy stop to kick in, which is fantastic anyway. So, all right. Well, I'm not going to just take up your time just for the sake of taking up your time. I see our question flow has died down here a little bit. So this is what I'm going to do. I'm going to go ahead and reel it in here and shut us down. I didn't eat breakfast yet. I just been sipping on coffee, so I got to find something for my stomach. So I can be rip-roaring and ready to rock when we're talking about the rest of what we've got going on for today, which means Apple in about an hour. So I'm going to get rip-roaring, ready to rock for Apple in about an hour. Again, guys, shoot me those emails, livetrader@zacks.com. Let me know what earnings reports you want to hear next week. I welcome those because it's an action-packed week, and I need to figure out what you guys want to do. So if you can shoot me those over, that'd be great. And I will send you the email shortly in regards to the Apple link so that you'll have that, and we will go from there. So thank you guys so much for hanging out with me here on the live Q&A, and I will talk to you all in about an hour. Have a good one.